How's it going, everybody? It's Stas here. Welcome back to another video. So it's Sunday, and you guys know what we do every single Sunday, right? We break down my game plan for the stock market for the upcoming week. We also go over earnings reports, breaking news, all that good stuff. So today, I am making the video a bit early because the Super Bowl is later on today, and I figured a lot of you are probably going to be watching the Super Bowl. So let me make the video before the Super Bowl, and that's why you're watching a bit earlier than usual. So if you all find value, hit the like button, subscribe, drop me a comment. Let me know if you are watching the Super Bowl, who do you think is going to win? Drop me a comment down below. Make sure to also join my Patreon and get yourself 5 stocks from Moo. All you have to do is use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Free money. That's linked down below. Same with the Patreon. And with that being said, let's talk. So you all know at this point, the markets have been crazy all over the place. Volatility. We have a lot going on with the economy. Russia, Ukraine is now throwing a wrench into all this, bringing a lot of uncertainty, whether it's legit, whether it's Western propaganda. Who the heck really knows at the end of the day? But what we do know is it's bringing a lot of uncertainty, and that's why the volatility index, the VIX, on Friday went up 14%, and it was up, I think, 25% at one point, and the market's now on the 20-day chart for SPY, and we'll talk about Triple Q here in a second. Both of these are starting to turn back to the downside, right? We did have a bit of a rally on SPY. If you guys remember, in the beginning of February, we did see a push from 426 on SPY to about 450, or actually almost 460. So we did run about 30 points, which was a 7% relief rally. That's a big relief rally. But you guys can clearly see we have a double top, and now we're breaking back under the moving averages, and we're seeing a death cross here on the 20-day chart. So SPY, it tried breaking out again. It tried seeing a push maybe back up to 460, 470, but it clearly failed. We double topped. Now we're back under the moving averages, and like I said, the uncertainty, the volatility, the fear is really getting to the markets, and the trend now is being dominated yet again by the bears. You guys can clearly see that on this time frame and on the 4-hour chart as well, as we're clearly getting rejected. If this thing wants to load, there we go. We're clearly getting rejected by the 180 SMA, and we're under both moving averages on this 4-hour chart. So SPY, not looking good for the bulls, guys. Not looking good. And Triple Q, which tracks the NASDAQ 100, pretty much the same thing, right? We're under the moving averages. We got rejected by the 180 SMA on this 4-hour chart. Pretty much a double top. And if you pull up the 20-day chart, you'll be able to see that we are now trading at a multi-week low. We broke the support at about 350 that held all of February. Now we're trading in the mid-340s. So I think this might be going down under 340, maybe this week, next week, who the heck knows? With all the uncertainty and fear, we might be going back to the lows on Triple Q, the lows being around 335. And same thing for SPY for that matter, guys. Look at SPY's lows from about 2 weeks ago, 3 weeks ago. Right around 420, 425. Now we're trading at 440. So we're getting there. We're getting there. Bears are gaining momentum. Volatility's up. And that's pretty much what's been going down over these past couple of days/weeks. So what do you guys think? Drop me a comment. Let me know your thoughts. Make sure to smash that like button if you haven't done so already, and subscribe if you do want to see more content like this, morning update videos, sometimes morning videos, not always. I mean, on Patreon, I post morning videos every day if you guys are into that pre-market, right at market open. And yeah, make sure to subscribe, guys. A lot of valuable stuff on this channel. So a lot of big tech companies, all of them pretty much, and a lot of big companies in general already reported earnings. We got those numbers. We digested them. And we have some more companies this week reporting earnings. We have Airbnb, Shopify, Walmart, Shake Shack, Roku, Palantir, the good old Palantir YouTube stock, right? Which, full disclosure, I don't own Palantir. We'll talk more about that later in the video, so make sure you guys stick on throughout. And we also have John Deere, ticker symbol DE. We're going to talk about that later in this video as well. But first, let's talk about Airbnb, which is the first big company, if you will, to report this week. They report on the 15th, so that's 2 days from now. That's on Tuesday. Let's see the charts, guys, because we like to focus on charts a lot on this YouTube channel. So Airbnb is clearly breaking out. Number one, it's been breaking out the past couple of trading days. It's been moving above these moving averages on the 4-hour chart. And mind you, we were downtrending since the middle of November. So this stock got bludgeoned from 212 middle of November down to about 135. So this thing dropped 35% from November, December, January, and now early mid-February, it started to break out. You guys can see again, we're now moving above the moving averages. We might be getting a golden cross as well. That could be right around the corner as the 50 is trying to maybe break above the 180 SMA. And one thing that's healthy, in my opinion, is the fact that we actually pulled back a bit on Friday. Friday, Airbnb went down over 3%. Down about $5.40. It pulled back a bit, and that's good because it got pretty overbought before that pullback as it saw about a couple of green days straight in a row. It got all the way to about 177, 178, and got a bit extended. It got a bit overbought. Now we're about $10 off those recent highs from last week, and I believe buyers could step in anywhere from 160 to 165 right by these moving averages. And mind you guys, earnings are in 2 days. Anything could happen. I'm personally not going to gamble on Airbnb's earnings, so I'm going to wait till after Tuesday to potentially trade it. But if you guys want to gamble on it, by all means. You can do whatever you want with your money, right? But for me, I always say I don't like gambling on earnings, especially on short-term trades. And who knows? It might shoot up after earnings, and I'm very interested in seeing their numbers, guidance, EPS, revenue, all that good stuff, because Airbnb is obviously a travel-oriented stock. We obviously know CV, right? The cases have been down a lot recently, and quite honestly, a lot of people, even during the whole Omicron craze, the cases were moving up. Let's be honest with ourselves. A lot of people were going on about and doing whatever they want with their lives anyway, And that's what I want to look and see in their numbers. Are their numbers going to take a hit because of Omicron, or do the numbers don't even reflect a hit from Omicron, right? That's kind of what I'm looking for. So what do you think about that? Airbnb, drop me your thoughts. Shopify is another one which, guys, talk about a stock that got destroyed. This stock lost $1,000 per share from the middle of November to the middle towards the end of January. So in 2 months, this stock lost $1,000 a share. And mind you, the stock was $1,700. So $1,000, that's a huge drop. We're talking 55% sell-off in just 2 months. And that goes to show how quick individual stocks can turn to the worst, right? How quick they can go down. And that's why I always say diversify. Maybe not 50 individual stocks, but have maybe 10, 15, 20 individual stocks if you want to go that route. Maybe have some index funds and then put some money into individual stocks. But don't go, in my opinion, this is not financial advice, in my opinion, it's dumb to go all in on one stock or 2 stocks or 3 stocks, because things like this could happen. Shopify went down 55%. Are you mentally prepared for a stock to go down 55%? If you are, by all means, invest in 1, 2, 3 stocks. But if you can't stomach that, put money in 10 plus stocks, at least, at minimum, or just put money in index funds, right? At the end of the day, that's a safe way to go. So look, Shopify, it's at $850 now. It went down 4.4% on Friday, and it seems like the downtrend's continuing, guys. Let's be honest. Look at this. It's under both moving averages. Like I said, we had a 4.4% red day on Friday. This could easily take the lows out. This could easily take the lows out by the looks of it. The lows being around 780, 800 with earnings coming up here on the 16th. So that's on Wednesday. Watch out for it, guys. Watch out for it. We'll see how things end up going. And I'm not sure. This is an interesting one, because with earnings coming up, let's say they crush earnings somehow, which could easily happen. And this is why it's a gamble. This is why I don't like buying and trying to, go up with the earnings, or you know what I mean, right? Short-term earnings bets. I don't like doing that because it's a gamble. But since the stock is down so much with earnings coming up, if they do well, this could easily shoot up 10, 15%, 20%. It could easily happen considering, like I said, it's down 55%. So keep that in mind, right? It's pricing in a lot of negative news at this point. So keep that in mind with Shopify. Earnings on Wednesday. Walmart, WMT, let's pop this up. Walmart's also reporting, and what you guys notice here is, number one, it's a wedge, right? You guys can see the wedge on the yearly chart. Let me pop it up. You guys can see that. That's the 3-year chart, actually. Give me a second. Yearly chart. You guys see this wedge that we're in? And if I delete this drawing set and look at it from a different perspective, I'm also noticing a descending triangle. This is not good for the bulls at all. Look at this on Walmart, guys. Descending triangle. If this breaks under 135, which is hanging on by a thread right now, if this breaks under 135, and mind you, that is a multi-month support, this could see a leg down. This could easily see a leg down. And look up descending triangles. The way that they play out is if the support level breaks, it could go down who knows how much, right? This could easily go down 120, 125, 130 with earnings coming up. Let's see here. Earnings are on the 17th. So that's on Thursday, Walmart's earnings. So watch out for it. It's in a very vulnerable spot, technically speaking, under the moving averages. Like I said, descending triangle. And I'm noticing a death cross that formed about a week ago, a little bit over a week ago. So watch out for Walmart heading into earnings. Ticker symbol WMT. Shake Shack is another one. And Shake Shack, if you guys haven't had it, they make one awesome burger. Great food at Shake Shack. And a little bit of a debate that I go with myself. I debate myself on this. What's better, Shake Shack, In-N-Out Burger, or Five Guys? I'm not sure if you guys have had Five Guys. And I personally like, to be honest, I think I might like Shake Shack the most out of all those, with Five Guys being second. You know, I've only had In-N-Out a couple of times. I was in Vegas twice. That's the only times I've had In-N-Out on the West Coast, right? I'm from the East Coast, by the way. So what do you guys think? You know, I'm sure a lot of you have had Shake Shack, Five Guys, In-N-Out. What do you think? I'd probably go, I don't know. It's really a toss-up. Either way, they're all great, and I've had Shake Shack the most, so maybe I'm a little bit biased. But overall, this stock is down a lot. From $110 back in June, it just hit $58 recently, so it cut in half pretty much, and it's recently been pushing up. You guys can see now we're back over both moving averages, and just in the past week or two, the stock's up 27%. It's rallied a lot with earnings coming up on the 17th, which is on Thursday. Same with Walmart. So this is another company that is beaten down like Shopify. If they report good numbers, this could easily explode. And let's see the 3-year chart on Shake Shack. Let me see this real quick. Okay, wow, it was actually $138 in the beginning of 21, so about a year ago. What the heck happened? I mean, you know, just because a stock goes down doesn't necessarily mean something fundamentally happened within the company. What it means, for the most part, or not for the most part, but what it likely could mean is the valuation got a little bit ahead of itself, right? And that's what I'm assuming. And mind you, I haven't done too much due diligence into the company Shake Shack. I love the burgers, trust me. I've tried everything on their menu, but the company itself, the numbers, I haven't done too much due diligence. But what I'm assuming here is the valuation got a bit stretched from $30. Literally in 2020, March 2020, it ran all the way to 130 and early 21, so it probably got a bit stretched. Now we're seeing the valuation compress a bit. If they knock earnings out of the park, maybe this quarter, next quarter, this stock might go back over 100. It could do that. So I'm watching out for Shake Shack here. Roku is another one, ROKU, which has also been completely destroyed. This stock was killing it in the pandemic. You guys know that. And its valuation has been suppressed heavily. And from my knowledge, I don't think anything changed fundamentally with Roku. It's just the fact that it got very stretched. It got too overvalued. And technically speaking, look at this. Clear-cut double top on Roku. And let me show you this with the circle tool here. Oval tool, whatever you want to call it. You guys can see over here on the 15th of February in 21, about a year ago, this thing hit 480, and then in the middle of 21 in July, so about 7 months ago, it hit 480 again. So we double topped, and it's been downhill since then. Now we're trading at $163 a share. So this stock is down well over 50%. It's down 65%. So it's down a ton. Earnings are coming up on the 17th. Same with Shake Shack and Walmart. That's on Thursday. And this one's not really showing a technical breakout by any stretch of the imagination. It's actually still in a downtrend. So will it break the downtrend? I have no idea, guys. We will see how earnings look. And I'm not going to touch it. Like I said, I don't like playing earnings. I'm not touching this with a 10-foot pole until it starts breaking out of the downtrend, which, like I said, it's not showing any signs of doing that in the short term. So that's Roku, ticker symbol ROKU. We also have the darling of the YouTube stock market space, right? Palantir. Palantir is reporting earnings this week on the 17th, so that's on Thursday as well. A lot of the earnings are on the 17th, guys, so that's going to be a big day. Make sure you all subscribe and tune in for these this week's videos. We're going to be pumping out a lot of content, so get ready for that. Palantir is down from $29 to $13, and it actually got all the way down to $11.75. So this stock dropped 60%, and this goes with the growth companies, right? Unprofitable growth companies that were running throughout the pandemic, and now they're dumping. Palantir's in that group. You know, we're seeing the valuation come down a lot a bit, right? Not just a bit, a lot a bit. This thing is getting destroyed. So, like I said with Roku, guys, Palantir is the same thing. I'm not touching this until we notice a technical breakout, which we're not getting yet. We're still on a technical downtrend. So that's kind of what I'm looking at here. On Friday, it went down about 3%. And yeah, we're struggling at about $14, $15 in the short term. And that is a point that just straight up needs to break for the bulls. And I'm not too sure if we're going to get out of there anytime soon. Who the heck knows? My guess is seriously as good as yours. So that's Palantir. And the last one for this video is John Deere, or Deere & Company, right? Whatever you want to call it. Ticker symbol DE. This one looks extraordinarily well when it comes to the technicals. It looks great, in fact. Look at this. We broke recently above 390, which was resistance from back in July, August. We double topped at about 390. Then we saw a sell off to 320 back then. Now we're clearly breaking out. We're above the moving averages, golden cross, all that good stuff. We're selling off down from 399 down to about 380. We're right by the moving averages right now. And yes, in the very short term, this thing is a falling knife. And wait a second, did it drop after hours? It looks like it did drop after hours. I'm not sure what's going on there. And that's on Friday. Let's see here. Not too sure why that happened. But either way, guys, it's selling off towards the moving averages on this 4-hour chart with earnings on Friday the 18th. I think buyers, especially if earnings are strong, even before earnings, I think buyers might step in anywhere from 365 to 375. That's right by these moving averages. And listen, it's just a pullback. That's what's happening. It got way too overbought. Now we're seeing the pullback, healthy pullback. Watch for buyers to step in. Watch where it finds support, and then maybe we could get an entry point. So overall, guys, that's it. That was John Deere. We talked about Palantir, Roku, Shake Shack, Walmart, Shopify, Airbnb. Drop me a comment. Let me know your thoughts, some stocks you're watching, whatever you want to tell me. Drop me a comment, and let me know who you think's going to win the Super Bowl. Drop me that comment down below as well. Hit the like like button, subscribe. Make sure to join my Patreon if you guys want. All my buys, sells, call outs, morning update videos, all that good stuff is on Patreon, link down below. And you guys could also get 5 stocks from Moo. Use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your money, link down below. I'll catch you guys in the next video. Peace out.